You ready?
Yep.
All right. Welcome everyone to the last Homebuyer seminar for 2025. We're excited to bring this to you and get things prepared for 2026. So we're going to have a productive meeting today, Nichelle and I, and we're going to go from there. We're going to go over who we are, the process, types of loans, qualifying, and the loan process, and go from there. But I'll introduce let Nichelle introduce herself, and then I'll introduce myself. Go from there. Nichelle, tell them a little bit more.
Yes. And by now, most of you guys know who I am. I'm Nichelle Boylan with Century 21 Judge Fight. I'm a GRIAB or realtor, which basically means I just like to learn a lot of stuff so that I can help my clients. My goal throughout the process is to give you as much education as possible so that you are an informed buyer or seller, help you protect your interests, and at the end of the day, build generational wealth one home at a time.
Like it.
Back to you, Ron.
Yep. So I'm Ron Toy, Senior Loan Officer with Meridian Mortgage, who's doing business as American Pacific Mortgage. We're in partnership, fantastic company, but I've helped over 2,000 families over the last 10 years with their home investment journey. And like Nichelle mentioned, that we are focused on helping people build long-term generational wealth, one home at a time. So I'm here to help, make sure they feel comfortable and confident every step of the way. Some of the ways that we do that are offering home buyer seminars like this and partnering with you, being a guide, not just trying to be a transactional partner, but a relationship with you that is there and designed to be successful along the path of homeownership. So, some of the stuff that I'm going to cover is how do you choose a lender? What are the questions you're going to ask? What's important to you? So, when you're beginning this process, you want to take a step back and understand your motivation of buying property. One of the key partners is your lender. It's a relationship because it's not just about the transaction. So you want to know what type of lender are they? Are they working at a depository? Are they a mortgage banker or a mortgage broker? And things like that. These are key questions. And you want to interview them. When you call, you want to ask questions to get to know them as a lender before you start to get into the mortgage application process. And so, some of the things you want to look at, and I have here, is breaking it down the differences between a mortgage banker, a bank, and a mortgage broker. And so, these are important because there's positives and negatives to each one. And so, what's great about what and why I partnered with American Pacific Mortgage and Meridian Mortgage is the fact that we are a mortgage I am a mortgage banker, but we have the ability to broker certain options if it's best for our clients. So we get to blend the best of both worlds. Now, a bank is a depository. That's like where you go to like Chase, Bank of America. It's where you actually make deposits. Mortgage bankers, like you see here, we have investor pools, Fannie Mae, Freddie Mac, Ginnie Mae, all of the other ones, Chase, Bank of America. And so we originate them in-house. We pay and close with our own funds, whereas a broker, they have a lot of programs, but they're not lending their own money. They don't have as much control over the process. But that's why we've blended the best of both worlds and are able to help serve our clients. And we are licensed in all 50 states. I focus on Texas, but this is a little bit more. Asking them, hey, what type of bank are you? Are you a mortgage banker, broker, or a bank? That's going to help you. Now, why is this all important? Because we're going to talk to you about building generational wealth, buying versus renting, because most people have rented in their life. And if you've gone through a rental application for an apartment or a house, you've pretty much done very similar to a mortgage application. Because you're going to have to prove income, you're going to have to prove assets. Now, yeah, sure, there might not be as much as what you'd think when renting, but sometimes to get into a house is less than it is to get into a rental property. But with buying, you get tax incentives. You get you get to grow your net worth through home price appreciation, which we're going to go over that in future slides, but also through principal balance reduction. Every time you make your payment, you're reducing the principal balance, which creates equity. Renting, you don't get any of that. This right here is what keeps me up at night, is knowing that homeowners have 40 times the net worth than a renter. This is huge across all income streams. You can see it under 26,000 a year. The homeowners have 103,000 net worth, where the renter has 1,000. This is insane to me, but this is why it's so important to buy what you can comfortably afford. Not trying to buy what everyone else is impressed with. No. If you're renting a one bedroom apartment, you can afford to buy a one bedroom condo. and not feel like you have to wait till you're buying this four-bedroom house with two, three bathrooms and a huge buy what you can comfortably afford. Make that your first rental property because you're going to build equity. And once you have your first house under the way, you're no longer a first-time home buyer, and now a lot more opportunities come in front of you. And then if you buy a house and you keep it for at least 12 months, you can go buy your next house as a primary, not have to put 20% down. And now that first home that is inexpensive and well under your budget can be your first rental property. So now you are not a first-time home buyer and you're not a first-time investor. So now you can open up to even more opportunities to build your net worth, which we'll go into in the future. But buying that first one is key. And that's why Nichelle and I already touched on this, helping people grow their net worth one home at a time. So this is huge. The fact that 40 times greater, this is pivotal to growing your net worth. And so most people, they start their search online. And right now, I don't know how many times, Michelle, how many times have you heard people tell you they want to wait because they feel like prices are going to come crashing down, the market's going to crash, rates are too high? Like, how many times have you heard that in the last 2 years?
I couldn't even count. I could probably go buy a house if I got a dollar for every last one of them, pay cash.
Yep, in the bank. And that's it, because when you start online, these are just like screenshots of like YouTube pages that like this is their I don't know the wizard name for it, but like the thumbnail when you go to them, it's always got to be these crazy overblown kind of the sky is falling type stuff. But most people start their search online, which is great. But if you're seeing this without the data to support it, you got to understand people get paid when you're online and you're a social media influencer based on engagement. Fear sells. Fear is what drives people that chicken, like the sky is falling. Oh my gosh, I got to click on this to prevent pain because this is mortgages are so expensive. The economy's crashing. So then it gets engagement. Doesn't necessarily mean it has to be accurate. It just got to get you to get engaged with it so they can get paid. And this is why I was talking about this earlier about home price appreciation since 1942. So when we're looking at data, real facts, not this accentuated, the sky is falling, this world's come to an end. This is since 1942. Now we know that World War II wasn't even over yet. Korean War, Vietnam War, the Persian Gulf, Desert Storm, all of the wars that we've seen, look at what home prices have done every year. Through all of the crazy, through gas shortages in the 70s, through the bond market massacre in the early 90s and all of the different economic turmoil, home prices went down one time in 1990 by 1%. And then you have a short period of time in history between 2007 and 11 where home prices dropped every year. People only look back at that time period and think anytime there's economic turmoil, it's going to be just like that. And that's not the case because back in that time period, the mortgage industry was filled with predatory loans, things like stated income loans, balloon mortgages. What is a stated income loan? You could tell me you made $400,000 a year. You didn't have to produce any documentation, and we would just loan off that. And people are getting five, six mortgages. Oh, and let's put it on a balloon mortgage. So you're only paying interest for the first 3, 5, 7 years. And no worries because look at all this appreciation prior. You'll be able to refi no problem. Guess what happened? When everything was hitting the fence and the walls, people couldn't refinance. So those balloons came due and everything burst and the economic crisis happened here. They put regulations in place to prevent that from ever happening again. But this is why homeowners build equity. Some people talk about in the 80s, oh, my parents bought a house in the 80s for bubblegum wrappers. Okay, yeah. Well, and you're wondering why homes are $1 million now. Well, look at home price appreciation since the 80s. It's a secure way to build long-term generational wealth because you're building wealth not off of your cash investment, it's off the value of the home. So if you bought a $300,000 house in 2019, you saw your homes go up 10, 19, 6, 6, 5. And right now, year over year, appreciation is around 3%, even when people thought it was going to be negative. Now, some areas have homes where the prices have stabilized, some have seen a little bit of a dip, but this is collectively. This is important. Why else did 2011 happen? Well, this is where I like to come with data and facts instead of emotions and clickbait because we saw this coming. If you look at 76 million people born in baby boomer generation versus 55 million people born in Generation X, that's a 20 million drop in birth. And you could see here in 1973, there was a big drop in birthing. This is important because birth rates correlate with housing formation and housing completions. Well, when you look at 2006, we had the most completions in history correlated and in conjunction with a drop in birthing rates. And you could see that with this blue and gold bars down here. The completions are in orange and the housing formations are in blue. When you have housing completions outpacing formations drastically during that entire time period. So this wasn't a shock. This is something we should have seen coming a mile away. And this is what we can see now because people say hindsight's 2020. Well, it's easy when you can go back and you know what to look for, but when you're in it, it can be a little bit of a challenge, right? This it shouldn't have been. But what we can see, guess what started happening around 2014, 2015, and then stayed consistent since, and it is that way now. That housing formations have outpaced completions drastically. So we are in the reverse of this, meaning there's more demand than there is supply. We all studied supply and demand in school. When you have more supply than there is demand, guess what's going to happen to prices? Whoop. This isn't a shocker. This is why that will never happen again. Things have changed. And then this didn't even have corporations buying up 40% of inventory and keeping it for rental properties to control prices even more. This is why I always talk to clients about this. Luck is what happens when preparation meets opportunity. You guys are a part of this homebuyer seminar. You've partnered with good realtors and lenders. You're asking the right questions. So people will say in 30 years from now, man, you got lucky. You bought a house in 2026 for X amount of dollars. Now homes are a million, 2 million, whatever it is. They're going to say you were lucky. You did the work. And that's what we're excited about. A lot of people are nervous to buy because they're not sure about what types of loans there are. There's Fannie Mae. Which is like your conventional mortgages. So I'm going to try to demystify this stuff for you. Conventional mortgage, it just means Fannie Mae, Freddie Mac. They're the largest investors in mortgage-backed securities. They had recent loan amount changes. Here in North Texas, the minimum loan amount now is $832,750. Programs with as little as 3% down. Then you have government sponsored. These are the ones that are backed by the federal government. That's FHA, VA, and USDA. And so you have that. Now, jumbo, what is a jumbo? That's anything that has a loan amount above the conventional loan limit. Now, depending on where you're at, now Texas, it is what it is. That 832,750 is the loan amount, but like California, Hawaii, Alaska, some of them have higher conforming loan limits. So that will be a little bit higher than the 832,750. Or if it's a duplex, fourplex, it goes up a little bit higher. DPA loans, what does that mean? So in conjunction with the conventional or government backed, there's a DPA programs like TSHAC, Seth, TDHCA, and others, where they'll give you either a grant, which is treated as a gift, or a forgivable second lien, usually 3 years, 5 years. Some of them have repayable, but the ones that I like working with, most of them have the 3-year forgivable second. Specialty programs. Are you a doctor? Are you wanting to build? Are you needing to renovate? Do you need a reverse mortgage because you're, over 65 and you're looking at that? That's what we're here for. That's why you need to interview your loan officer. Talk about your situation. That's why it's a lifelong commitment so we can help you build long-term generational wealth and know when you need to start looking at reverse mortgages and renovation products and construction loans. That's what we're here for, so that you don't have to feel like you got to go Google everything. Because I don't know if you've ever experienced like having a little scratchy throat and you go to WebMD and next thing you know, you've got tuberculosis. And so like it's helpful for a little bit, but you still got to trust a professional, someone who's invested time, energy, money, and a good portion of their life to mastering a craft, so that you don't misdiagnose yourself and delay buying because you thought that you couldn't buy right now because ChatGPT told you no. Because what are we going to look at? We're going to look at qualifying for a loan. There's 4 key pieces that we're going to like deal with when qualifying: your credit, your income, your assets, which is your money, and the property itself. So once you're under contract, credit can be confusing. I know this. We're one of the only developed nations in the world that still use a credit system. Some programs allow down to 600, some of them down to 580, but that's why you want to talk to us. Um, there's programs that have different options, but we're going to look at, did you have any major credit situations happen, foreclosure, bankruptcy, um, things like that? Doesn't mean you can't buy, just means we need to address that so that we can properly document it and make sure we choose the right program based on your current situation, or give you a clear timeline of when you can purchase. Some of the ways credit work, it can be confusing. 35% goes to payment history. Have you paid your payments on time? 15% is the length of credit. That's why sometimes when you pay a debt off, your scores drop because your average length of credit out shrinks. So if you had a student loan for 20 years and you pay it off, now your average length of credit has now dropped because you don't have that 20-year debt anymore. And now your scores could go down 100 points. Now, I'm not telling you not to pay off debt. I'm just trying to explain to you that there is a system that we can look at and maybe tell you, hey, before paying off that student debt, let's look at an option. Or before you pay off that car, let's talk so that we can manage this position so that your scores are maximized. Amount owed. What's your balance utilization or credit utilization? And then finally, the in use of new credit, applying for new debts. Now, this little tool helps you see if you max out your cards, what it can do. Bankruptcy, what you can do. As you can see, bankruptcy is not the end of the world. Some people wait and wait and wait and don't do bankruptcy, thinking it's going to save their life, and then they end up getting a foreclosure. The point difference isn't much, but the actual timeline to buy off of bankruptcy is shorter than a foreclosure. That's why you need to talk to a local licensed residential mortgage loan officer when you're in a situation and have that relationship so you don't feel embarrassed, so they can help you manage your equity position. This is my point. Foreclosure, 7 years, 3 years, 2 years for conventional FHAVA. Look at bankruptcy, chapter 13, 2, 1, 1. Even chapter 7, it's 4, 2, and 2. So you've got shorter timelines. That's what I'm saying. Sometimes it's better to talk to somebody to help get you connected with the right people because everybody goes through life. Sometimes stuff happens and you don't need to be embarrassed. That's why I said don't pre-underwrite yourself. Don't prejudge your situation thinking you have to wait longer than you might. Credit improvement. I can help walk you through it. One of the things, the reason why Nichelle really values my partnership is I'm going to work with clients no matter what position they're in, and I have a top score program. I'm not the only one that does this, but what we do is we look at your scores. We're going to look to see what could be done on a rapid rescore, meaning maybe it's paying down a balance just a little bit. You send me that information that was paid. I force the bureaus to update within 3 to 5 days. Now you got a better score. I can walk you through these things, and it's free. Next piece, employment. This is important. Why do we look at employment? We're looking for your ability to repay the loan. Because think about it. If someone came to you and said, hey, can you give me $300,000? What questions would you ask? Would you want to know where they're getting paid? How often they're getting paid? Exactly. And so that's a way for us to be able to properly judge the risk for a file. Now, again, don't prejudge yourself because there's different scenarios for each program that will fit your needs. Most of the time, people think, oh, if I haven't been on this job for 2 years. Well, how long have you been in the line of work? Sometimes it's about following the income, not necessarily just the job. Are you self-employed? Great. How long have you been self-employed? There's ways around any kind of situation, but we have to do it within the guidelines. That's why we got to talk earlier. But what we're looking for is your ability to repay, the consistency of your pay, and make sure that you're set up for success because nobody wants someone to be in a bad position. And so what are the payments, right? Because a lot of people don't buy because they don't know what they don't know. That's everybody. Well, in your mortgage, if you're paying rent, you are paying a mortgage, it's just not your own. But this is how it breaks down. Your P&I, which is your principal and interest, taxes, and insurance. Now that's your homeowner's insurance and your mortgage insurance. So when you see it, it's PITI, it's your principal, interest, taxes, and insurance. The last piece of the pre-application before you go out shopping for a home is the assets. We're going to verify that you have the funds to purchase the home. Or if we're going to need to supplement some of those funds with down payment and closing cost assistance. But we want to debunk some of the myths out there because even to this day, in 2026, people still think that they need to have 20% down in order to get into a home. or they need 20,000 or 30,000 or 15,000, some kind of a big, large amount of money. When it's just not the case. There are programs that allow for 0% down, 3%, 3.5%, 5, all different down payment amounts. There's and some people think you need to pay the down payment up front. Kind of like when you get a car, they think you got to pay that right then and there in order to get the house. No, the down payment is part of the closing costs that get paid at closing. And those funds can come from a mixture of gift, seller concessions, interested party concessions, down payment and closing cost assistance programs, grants, city grants. There's a lot of different ways. And finally, which I touched on a little bit, you need 10 to 20 grand in the bank to buy a house. That's not true. You don't. Some people will never buy because they are chasing having 10, 20 grand in their bank, and some of them have never even had 5,000 in the bank. So then it feels defeating. Like, man, I'll never get this. But if I can help put a path together and show you, hey, maybe you get a $3,500 income tax check every year, and if you say 1,500, now you're getting into a property, and if we get enough seller concession, you can get that check back at closing. Let me help you build long-term generational wealth instead of someone else's. Because here's what it needs. On a $250,000 house, earnest money. This is what you need to get under contract. Your earnest money is typically 1% of the sales price. So that's 2,500 bucks. Appraisal, typically 6 to 700 bucks. And an inspection. You have to get your home inspected. Now, that's optional. It's up to you. I highly encourage you to do it. So I'm always going to put it in my numbers. You need to get that. But it's separate from the transaction. This is something for you got to do on your own. That is 5 to 700 bucks. So you're looking 3,600 to 900. Now there is option money that's in there. Usually that's 100 bucks, but that's why there's a range so you can understand. If you're buying a $250,000 house, if you've got 4 grand in the bank, usually you can get it done, especially if you're using down payment closing cost assistance programs and get some seller credits. Now, when seller credits go away, this is going to change. Right now, we're still seeing a lot of properties with large seller concessions. And so that's what we're here to do, is put together a game plan to show people out there who were convinced that they needed 10 to 20 grand to buy that, hey, this is a little bit more manageable. And I know Nichelle and I have closed business where people got checks back. Last month, when I had two clients, one closed, they got $1,500 back. The other one got almost $4,000 back at closing. So, Nichelle, how many of your closings end up getting a check back at closing over the last year?
So if I go over the last year, I had 3 clients that got cash back.
Isn't that nice?
Yeah, I had three clients that got cash back.
How many of those people, how many renters ever in your life got a check at closing of getting their signing their lease agreement?
Nil, zilch,
Zero.
zero.
Yep. But when
I'll
you
give you
rent,
all the languages.
exactly. But when you rent, you still got to pay your first month's deposit, security deposit, pet deposit, all of these fees to get into a rental. How about let's get you in a house, build your long-term generational wealth instead of someone else?
On average, it's going to cost you somewhere between 4,500 and 6,500 to get into a rental
Yep.
in today's market.
And we could be getting them into a house for that. And that's why we got to keep doing this, because not very many people are even told that. And they're like, what? What do you mean? I can get a house for the same? Yes. And here's how we'll do it. But assets, what is that? That's the money to funds to close. We're going to need to look at where it's coming from. Are you getting a gift? Is it from an acceptable source? Is it a 401k loan? That's okay. We just need to get the terms of withdrawals from savings, checking. We just need to source the funds and make sure that we have that dialed in so that when you put your earnest and option money down, you're not in jeopardy as much as we can control of losing that earnest money throughout the contract. But there's so many ways to get the assets you need to qualify for a property. And so that's another reason why we want you to talk to us as soon as possible. So you're not feeling like you have to save some crazy number, but you have a clear game plan and what to do if you need to save those funds. Because some people they flip furniture on the side, right? And they make money. Well, how do you properly document and source those funds so that you can use them in a mortgage transaction? So you need to know how to, download and save the post that you make selling the item. Document the transaction with a bill of sale and get the funds and then immediately deposit the funds. You need to know how to do that to properly source it for a mortgage transaction. So that's where it is the paper trail. Down payment assistance can help cover it with the assets. Across here is the national ones. We have access to do all of them. Then there's state specific ones like T-Shack, which is one of my favorites. They have the grants. They have MCC credits, which can help if you have a tight debt to income ratio, but up to 5% of the total loan amount to help cover cash to close, which means almost your entire down payment plus closing costs. It's huge. Finally, property. What we're doing once you're under contract, the lender is going to order an appraisal. They're going to go out there, they're going to look at the property. Now, some people are like, well, what's the difference between if it's a conventional offer versus a FHA offer? The inspector that goes out is more than likely licensed to do all of the types of inspections because they're a business professional. But there are certain things that they will focus on a little bit more in a government type loan. Like VA, they're going to look for wood rotting insects a little bit harder and be real strict on that. FHA, it's the health and safety of the home, peeling paint for the lead-based paint addendum, certain little things, but it's there to protect your investment. So if a person is worried about it passing in appraisal inspection, that's a could be potentially a red flag as a buyer, in my opinion, because why are you nervous that this thing won't appraise because of some peeling paint? Well, fix the paint. I'm about to give you a lot of money. Or you see on this picture right here, there's dirt growing up, right? Some might say just stamp that down a little bit. It seems petty, but there's a reason because if there's a line where now this is just a hypothetical, but if there's a line on your foundation, if you have a slab and the dirt's growing above that line, that could get pests inside your foundation. And then that can go into your house and eat up the wood and cause damage. Do you want your house to be protected or do you want it to be an open risk because somebody was lazy and didn't want to call it out? And if you're a homeowner or a buyer and you never even thought of that, that's what this is there to do is to protect you from being in a bad situation. But we're going to look at it. The home appraisal and protects the lender. The inspection is different. That a home inspector, that's something that you hire that's going to come in and do a fine-tooth comb, make sure that you're good. But for the lender side, what we're doing is the appraisal. And the appraiser is going to do an inspection and they're going to make sure that the property's there. They're going to take measurements. They're going to look at the documents online. They're going to look at the contract. They're going to do comparables and make sure that the investment makes sense. And so, as you can see the timeline, pre-approval, once you get pre-approved, you're going to go out and start looking at a home with your realtor. They're going to have a consultation, put together a custom, search. You get the under contract, we're going to send you initial disclosures. Those go out, you see them. Those numbers are usually high because we don't have title policy, we don't have the insurance yet, but we got to get you the numbers out. Then you sign them, it comes back, we go to processing. You get your inspections and done, and you give the green light for us to order the appraisal gets done. It comes back, it goes to underwriting for your final approval. Then you have once that's all done, you get your CD, which that has to come out. We like to get it 7 days before, but the final CD has to be out 3 days before closing. Loan documents get sent to title, then you go and sign. So we table fund, meaning when you go and sign at the title office, as soon as those documents come back fully executed with the buyer and seller's signatures, we fund. So then funding is authorized. Now you're in your home. So that is our process, start to finish, on buying a property. Now, Michelle's going to take over and tell you what it's like to choose a realtor and her process.
Yes, and so I think the important thing that there's one key word that you should hear throughout this entire process. Really two. And the first is relationship, and the secondary one is teamwork. And what I tell all of my people is the old saying of coach, put me on your team is really what it's all about. So when you're looking for a realtor, you're looking for someone who you're going to vibe with, because you're going to be spending, depending on where you are in this process, anywhere from 3 months to a year with this individual. Typically, the closer you get to purchasing that home, I joke about it, but it's really serious. Whenever I go through this phase with my clients, it's like I'm losing a friend in a way when we close because we've spent every weekend together for the last 2 or 3 months looking at homes, or we've had conversations 3 and 4 times a week about the home buying process. or they were freaking out over, and you're going to freak out, which is expected, over something that they don't understand, and we're having a conversation at 10:30 at night about this meeting because it really does develop this relationship and this friends. And in my case, a lot of my prior clients I still communicate with on a regular basis. I know their birthdays. We send each other little gifts and comments. I've been invited to their homes for housewarming parties, for other events, and so forth. So you really do develop that relationship. The second part is it's about that teamwork. And as your realtor, you need to make sure that your realtor has a strong team connection. Do they have home inspectors that are going to help you once we do get you in the contract where you can interview and pick the best home inspector for you that's going to evaluate that property that you're getting ready to purchase and bring yourself into, whether you're single or you're moving in with the family? And last year alone, I think I had 5 women who were single under the age of 30 that bought their first home, which is freaking awesome when you think about it, because they're already building generational wealth. You're also looking to make sure that your realtor has a strong vendor network. In my case, I have a connection network. Do you need someone who's doing lawn care? Do you need someone who's working on roofing? When we're going through that home inspection and we find out that there's a plumbing issue, do you have a realtor that has a connection that can get someone out there during your option period while you're still having to decide to back out of it and getting all your money back? Or are you having to call through the Google pages to find someone to help you and you don't know what their reputation is? You also want to know is what is their experience with the properties that you're working with? Have they ever worked in a condo? Have they ever sold or purchased a condo or helped someone sell or purchase a condo? Do they work in a particular area? Because if you don't know that Forney is getting ready to go through some serious development right now and traveling to Forney, they're expanding those roads. So over the next couple of years, you're going to be having challenges if you're living in that area and you move to that area without that knowledge, then you're going to be at a disadvantage. So your realtor needs to have geographical competency for the area of which they're going to be helping you purchase. If you're in an area like Heath where there may be water restrictions, okay, so you moved out in there, and if they don't already have water, and you get a realtor that gets you set up there, and you purchase a home, and then you go to call the water company, and they're like, "Sorry, we're not giving out any new water leases right now, so you just purchased a $400,000 home that you can't get water to." And this has happened because some people work with realtors who are not geographically competent. The other thing is, are they listening to you or are they telling you? Because throughout this whole process, I tell my clients all the time, I am just your resource. You are in the driver's seat throughout this entire process. And so I'm going to ask for your insights on everything that we're doing, step in hand by hand, and give you guides. And if I don't have an answer, because I'm not going to know all the answers, I have a resource that is going to be able to source that answer for you. And then the other thing that you want to keep in mind, which I think is probably one of the biggest thing, is what are others saying about them? Uh, are they getting referral business? Or when you talk to them, do they say, yeah, I don't have any referral business, which may be okay if they're a new agent. But if they've been in business 5 years and no one is referring anybody back to them, then that says something about the type of work that they do. And outside of that is how are they communicating with you? I go through the process. How do you want to be communicated with? In my line of work, I actually have both two types of pledges. I have a buyer's pledge and I have a seller's pledge. And it has about 20 things that is a contract that I sign and tell you that I am going to do for you. And what I tell you throughout that process is if at any given time, I have thick skin. If at any given time I'm not doing something on that sheet that I should be doing, then you need to call me to task because my goal is that anytime you have a real estate question, I have clients that hold me to this. Even after we have sold and closed your deal, you come to me and ask me that question because I want to be your source of truth when it comes to resources that helps you build your generational wealth. So if I'm not doing that, let me know because my goal is you hear someone say something, hey, I'm thinking about buying a house. Hey, you know what, my realtor Michelle. Someone has a question about maybe they're not buying a house, maybe they're having roofing problems. Hey, my realtor Michelle has some contacts for you. Um, Maybe it's time of the year where we're going to have to do, which is coming up. We've got escrow adjustments. Hey, Michelle can help you with that. It's escrow adjustments. What are escrow adjustments? That's going to happen every single year. Ron talked about the PITI, where you have certain fixed costs in 99.9% of the cases because we're not really doing arms anymore. So your principal and your interest are going to stay the same the life of the loan. But every single year, your taxes and your home insurance, your casualty insurance is going to adjust each year, which is going to adjust your monthly payment. So somewhere between January and February, I reach out to my clients. I send them an updated comparative market analysis of what their home is ready for now. And then I go, hey, which is what I did recently at a white elephant gift party that one of my clients was hosting. And she told me that her insurance was going up $500. And I was like, hey, you know what? I think this might be a time for you to shop. And by the way, you're a veteran. Who are you with right now? You're with Geico. Hey, why don't you check USAA? Because as a veteran, you might be able to get a better deal than what you're getting, and that's going to lower your monthly payment because a $500 increase is pretty much almost a $35, $50 a month increase in your mortgage payment. Then you have your taxes. So one of the first things I did with her is, as a disabled veteran, we made sure that she got her home exemption filed. We made sure she got her disability exemption filed. And so that's going to reduce her tax burden. And then in the state of Texas, she now gets an automatic $200,000 deduction because she hits both of those categories with the recent laws that passed. So on her $400,000 home, guess what? She's paying taxes on $200,000, which is great because she's in a PID that has a $70,000 PID on it, which creates another $1,500 a month on top of her regular tax burden. That's a lot of math. But the point is, I'm not just open the doors, here's what you see. Do you like it? Let's write an offer and move on down the table. I am your partner for life. And my clients that I have made in this business are my clients and friends for life. We reach out to each other. They have questions. They call me up and ask questions. And they might not be looking to buy anything, but I am their source of knowledge. And if I don't know the knowledge, I've reached out to Ron a couple of times on behalf of my clients. Go, hey, Ron, I've got a client. We're not selling anything. We're not going to make any money off of this deal. It's not about making money, but they're in a situation. Here's the situation. Can you help us understand it? Me and Ron actually had to deal with someone who we had a locksmith issue where we couldn't get one of the deadbolts off the lots, and Ron was getting ready to go out there and move it off the door. I mean, these are the things that we deal with. We are a full source, full service in everything that we do. And so, Ron, if you want to move to the next slide, I'll kind of go through one more slide, this one, and I'll kind of talk about the full home buying process. And so, what does Ron talked about? What is the path for the lender side, which is the backhand side that funds the home processes? I'm going to talk about what the experience is like for the front hand side. Obviously, the first thing you want to do is you're going to meet with your realtor. If it's me, I do not take on any client that I have not done a buyer strategy session with. And the reason why I have set that up is because I've done it in the past where I didn't do a buyer strategy session and I learned the hard way. I didn't get the key facts that I needed for the client. I didn't understand what their buyer needs was. I didn't understand what their wants was. I didn't understand their parameters was. And in the process, my first couple of deals out of the rodeo, we could probably wasted more time and frustration. So now we do a buyer strategy session to see if it even makes sense for us to work together. I'm going to ask you questions about what's your budget? What's your timeline? What areas are you looking at? Can I support those areas? Do I know what's happening in the market in those areas? Do I know what the swings are in those areas? Do I know what type of financing are available in those areas? Because there's new construction as well, which we really didn't go into, but new construction is a little bit different than pre-owned. And then once I've done that, I'm going to ask you, do you have a lender or do you need assistance with finding a lender? And then once we do that, I'm going to introduce you to that lender. We're going to get your keys. Your keys is your pre-qualification, your pre-approval letter. You'll get that from once you meet with Ron, and then we're going to go out there and I'm going to set you up on what I call Real Scout. Real Scout is a tool that pulls in all of the multiple listing services, and I mean all of them because we have merged MetroTex, which is who I'm with, but we've merged with like eight in 2025. And so now we have Collin County, we have Houston, we have a whole bunch of different subsets of, multiple listing services, which means I have a bigger bandwidth of home and a bigger pools where you're not having to go to Zillow, which may not have all complete information because Zillow is just pulling from these sources, but I'm going to get you direct to the correct source. And then the cool thing about it is you can thumbs up, thumbs down it, and you can request directly from my site a tour. And I'll get an email that goes, hey, client X wants to see this home. I'll call you up, go, hey, what's our approval time? What's our range? What's availability for you? And we'll get those scheduled. And then because it's live, you'll be able to see real time the status change of that property. So if we're getting ready to go see a property, and I've had this happen before, we're getting ready to go see a property Friday at 5 o'clock. One of the first things that me and my client both do is we go back and we check my presentation that I've set up for them and we see if it's still available. And in some cases, we'll see it goes under market. So why waste our time going to look at that property if it's already under contract? Let's move on to the next one. You're not going to always get that with Zillow because Zillow is pulling and it has a delay from how quickly it can get the site from the different multiple listing services. Then we're going to find your property after we've toured it. And I'm going to give you a market analysis for that property, tell you what the property has sold for in the area, other properties, similar properties. And then you are going to decide based off of the information that Ron and I have informed you with what you want to offer. And then based off of what you want to offer, I'm going to structure that deal in such a way that it is favorable for the seller in their mind, but really it benefits you in all honesty. Because the goal of any deal is always going to be a win-win situation. So you have to structure the deal in such a way that you make it a deal that is pleasing to both sides of the coin. And if you're not working, and I work both, and I'm both a seller agent and a buyer agent. And if you don't know the motivations for the other, it's very difficult for you to structure that deal properly. And so that's the benefit I have of being one that works both sides of the coin. Then the other thing after that is we're going to move into your earnest and option money. Your earnest money on a new construction can be up to $10,000 in most cases, but on pre-owned is about 1% of the sales price of the home. And Ron mentioned option right now because we're not really having a lot of competition when it comes to homes is about $100. But I also had one in December where it was $500. So it depends on the situation. In the one where it was $500, it was $500 because we were asking the seller to take the home off the market for 10 days. And it was during the holiday season when they were building their own property that they wanted to move into. And so we had to give them a little bit more in the skin of the game to make it more appetizing to them. We closed that deal though. And so those are things to keep in mind. Then the other thing is you want to do, and I really wish, and one day I think I'm going to go back and tweak this because they say the next thing you want to do is schedule your inspections. I agree with schedule your inspection for step 6, but I don't schedule utilities and I don't consult moving guides at this point. I don't do that into after option. And the reason I don't do that to after option is because I tell all of my clients the same thing. Option period is the period where you get to try on the house. You get to prod it, walk through it, kick the tires. You paid for that. But if something comes back that doesn't fit right, that doesn't look right, you can call me anytime during that option period and you can say, Nichelle, little baby Jesus came to me this morning and said I should not buy this house. And the only thing I'm going to say is let me send you a notice of termination so that we can sign off on it. Now, I'm going to probe and ask you a couple of questions. And once I get the sound information that, you know what, little baby Jesus, let's move on. I hear you. We're going to move on to the next one. And then we'll sign in and you'll get your option and your earnest money back. And that's what option period is. And so that's why I don't like to schedule utilities or do anything else until after we cleared option. Now, once we cleared option, yes, you need to go through the process of finding your insurance for the property. You need to go ahead and work on scheduling your utilities. I recommend scheduling them a couple of days early before close, even if there's lap over, especially for insurance, so that you know you've got coverage. And then during the option period, we're going to do negotiations. And negotiations is going to be a couple of things. In some cases, if we trust the workmanship, it may be we ask for them to do repairs. If we've seen the workmanship where I saw a house before where it was a new construction home, and let's believe me, it was shabby workmanship. We had door sills that were unlined. We had cracks already in a new construction floor. They didn't put down floor, they just epoxy fixed. We had door hems that didn't hem correctly, and we had windows that weren't closing. And so when it came time for repairs, I actually requested my client to, hey, why don't we just ask for cash? Because clearly this person doesn't have the best workmanship. And so maybe you want to take the cash and do it yourself. And then in other cases, we've got extra workmanship where my last deal I closed out at the end of the year. We gave them the options. They were building houses, and initially they said they were going to give us cash, and then they go, "Wait a minute, we've got a contractor, we've got a GI here, we've got a roofer here. Why don't we just do the work?" Perfect. Work for us. We don't want your cash anyway. We don't want to walk in and have to do anything. And if you've got people out here that are doing it already, just give us the receipts, give us the warranties, and we'll call it a day. And that's how it works. So, what you should get from this is a lot of this is flexible, and most of this is negotiable. And that is where I come in. Many people don't know this, but I actually have a master's degree in negotiation from Dallas Baptist University. So, negotiation is a strong part of my background that I bring into the real estate market. Then we're going to move into the approval process. And when we get to the approval process, the way that I structure my deal is there shouldn't be a lot that you're doing except giving in a couple of updated documents here and there because Ron and I do the hard work up front so that in the end you're really packing and maybe picking out, and then we have a concierge service so they'll help you with your utility setup so you don't even really have to do that. So it's easy peasy for you. And title companies going through their title process, they're figuring out what their community, what their commitments are for you. They're getting the commitments together. I'm reviewing the commitments. We're seeing if the seller has any outstanding debt that are going to be paid off because we want to make sure those are paid off before we close because typically those debts will follow the property and not the owner. And if you don't have the due diligence done, you can have a situation happen that happened to me when one of my sellers back in June of this year for 2025. And that is the previous title company that helped them when they bought the house some 15 years ago, missed something. And they had a municipality bill of $1,500. It's a nominal amount, but it's $1,500. That's not their money that had to come out their proceeds. And as their realtor, guess who gets to tell them, hey, the proceeds that I told you were gonna make, they're $1,500 less. Now my title company did say, hey, I can, if you want, I'll tell them and break the news for you. And I'm like, no, it's my client. I'm gonna own up and tell them what it is. It's not something that I did. It's not something that we missed. It's just something that because it was put on the count after title closed, title didn't cover it on the insurance policy. And that's a problem because this is why we have to make sure all your Schedule Cs, and I'll talk to you about that at another time when you call me for that personal strategy session. But all your Schedule Cs are cleared because if they're not cleared, then those follow you. And then last but not least, we're gonna get that big old kumbaya moment where we're gonna move to signing those 100 documents. And I don't exaggerate when I say about 100 documents. It really
That's
is a stack of paper to transfer property in the state of Texas. But you're gonna sign those off, and once you get through signing those documents, The seller's going to sign, and if the seller signed first, then if you're with Ron, he does table funding. So 9 times out of 10, I've got a text message before I even show up for closing that we've already been funded. And if we're the second one to sign, as soon as we sign, and it gets back to Ron and he approves, I get to hand you your keys and you're now a homeowner. The problem with that is if you're not working with Ron or someone who's table funds, I've had it happen on the same client that had to eat the $1,500 where they didn't work with one of the most, what's the word, organized realtors there is, who didn't really understand deadlines about a lot of stuff. And they also didn't work with a very organized lender. And so their lender didn't start processing their paperwork until a week before we were supposed to close. And they were an I-10 buyer. And if you know anything about an I-10 buyer, you will understand that this is someone who doesn't necessarily has a social security number. So they have extra work that they have to do to get approved here. And we ended up one having to push closing because they started late on getting them processed. And then we come to find out we could close, but the kicker is they don't fund for 48 hours until after they've received the documents. And the way that the agent set up the closing and extended it, she extended it for the last day that they had to stay in their apartment. And so they were basically homeless for 48 hours because they don't get the keys until we're funded. And that's a situation of being not disorganized, is what I mean. So, being disorganized can cost you just as being organized can help you. So, the key when you're looking at finding a realtor is asking them, how often do you close on time? How often do you help me close on time? Just like with the lender. How well can you make sure that I meet my goals? If I tell you this is my target, are we going to hit that target or are we going to have to keep pushing it? And if we're going to push it, are we hedging our bet or do we know our answer? So at the end of the day, I want to thank you for coming with us today. Excuse me. I want to thank you for joining us here today. And we are here to help you build wealth one home at a time, but we are also your resources. Whether you are doing business with us today, tomorrow, or 10 years from now, our goal is to always be top of mind and to be your resource in everything we do. And I'll pass it back to Ron before we close out.
Absolutely. And I think that was perfect how you tied it all in. And the celebration, having the organization is key. And the notifications, just let us know. Because with the key thing that many people don't realize that there's 8 companies and 32 people on average involved in every closing. And your realtor, your lender are trying to organize all of them. Is it the home inspection, the appraisers, the home insurance, the title companies, the inspectors, the roofers, the plumbers? We're putting that all together to help you have an experience that's enjoyable and memorable. And if you don't partner with the right people, this that can turn the entire process can turn into misery. And we're here to help you feel comfortable and confident every step of the way. So interview, talk to them, find out if they have a plan, and hopefully you just trust us, you come to us. But if it doesn't turn out that way, make sure you ask them questions to get that comfortable and confidence established so that you don't hate the home buying process because it is in the top 5 most stressful things a person does. Most people only do it 2 to 3 times. So we'd love to be a part of that journey. If not, at least make sure that they have some type of plan to help make sure that you don't hate the decision you make. But yeah, thank you so much. And we look forward to you guys joining us for our next one coming up at the end of January, correct?
The end of January. I think it's the last Saturday of January.
I think so too. But yeah, we'll get the notifications out and go from there.
Peace.
Awesome. All right, thanks.
Also, before you check off, one other thing. What's going on with Tanya? Because that's
Uh,
the other one I was going to ask you about. I saw she applied.